Dawn finds us armored, Warband. Let me tell you what the night brought. It is Sunday, the 16th of August, 2026. On Friday, a securities filing told you something no press release has managed all year. What the most important company in the artificial intelligence build-out actually owns. It is not chips. Start with the anchor. As of 5:30 this morning, Eastern, Bitcoin trades at 63,000, essentially unchanged on the day, and roughly half its record high. Our board carries its trend red, and has since the 10th. Around it, the broad market green, the Nasdaq green, gold green, the long bond red. Risk on, pointed up, stocks leading. That is our read of the InvestAnswers Decision Support System. The alert tape this weekend belonged to one coin. Solana printed mean reversion oversold twice. Once at noon Eastern on Saturday, again at midnight, 5.5 hours ago. It trades at $75. Now hold that against what I told you 6 days ago. On the 10th, I stood here and said Solana had just printed mean reversion overbought twice inside a single day at $77, and that a thing which goes green and immediately sprints has borrowed from its own future. Market, do not chase it. 6 days later, $2 lower, same coin, same 12-hour rhythm, opposite signal. That is what an honest oscillator does. It never predicts. It measures how far a thing has traveled from rest, and it hands you the uncomfortable print exactly as fast as the flattering one. Ethereum printed that same signal Friday evening, Bitcoin at midnight Saturday. 3 majors, 1 reading, inside 52 hours, and beneath the tape sits a number worth holding. As of Friday, the share of all Bitcoin held in profit stood at 51 4/10%. Just under half of every coin in existence is carried below what was paid for it. That is no fresh record of pain. The same measure sat under 50 back in June. It is the shape of a market grinding sideways beneath its high. Meanwhile, the American spot funds bled $390 million across last week, their largest weekly withdrawal in 6 weeks. Now to Friday's filing. Nvidia disclosed a $21 billion stake in SpaceX, 122.8 million shares. Understand where it came from, because the path is the story. In January, Nvidia put $10 billion into Musk's artificial intelligence house. In February, SpaceX acquired that house outright, and the position converted into stock of the rocket company. Nvidia did not go out and buy a launch provider. It bought a model lab and woke up owning a piece of a space program. Sitting beside it on the same disclosure is a $30 billion stake in Intel. Those two are now the largest equity positions Nvidia holds outside its own business. A company that earns its living selling silicon has quietly become a major holder of other people's stock, a rival foundry and a rocket company, and it took a regulatory filing, not an announcement, for the market to learn it. Set that next to the roughly $500 billion of outside financing it has been arranging with the big private capital houses, and the shape is unmistakable. Nvidia is no longer only selling into this build-out, it is underwriting it and holding the paper. Now put the second fact next to it from the same 48 hours. On Friday, Musk told SpaceX employees the company will train Grok on the sum total of its internal data. He called the staff the model's parents. Follow that ownership all the way down and it closes on itself. Nvidia holds $21 billion of SpaceX. SpaceX owns the model lab. The lab's next model trains on SpaceX's own engineering corpus, decades of propulsion data, failure analysis, and manufacturing tolerance that exist nowhere else on this earth and cannot be scraped off the open internet. And that model runs on Nvidia's chips. You can watch that chain reach for physical form on the road too. Tesla has been running unsupervised robotaxis in Miami since early July, its first market outside Texas and California. How many cars are actually turning wheels in any of those cities, nobody outside the company knows. Tesla has never disclosed the fleet count, and every figure you have seen quoted is somebody's estimate wearing a reporter's jacket. I will not hand you one. I will hand you the structure instead. Rockets, a model lab and a car company under one man's overlapping control, and as of Friday, the chip vendor owning a piece of the middle of it. Here is what actually matters in that. The chips are not the moat. Anyone with enough money buys chips. The private corpus is the moat, and there exists exactly one copy of it. Now to the part of Friday that almost nobody said beside it. July, retail sales fell 0.6% on the month, the steepest drop since May of 2025. Online sales down 2.2%, auto dealers down 2%, and the University of Michigan's preliminary August sentiment reading sank roughly 8% to 51. 51. That is not a soft patch. That is a number out of a bad decade. It landed one day after the broad market closed at a record high. Sit with that gap. The index is at an all-time high because a handful of companies are spending unprecedented sums on machines. The consumer who is meant to eventually buy whatever those machines produce just stopped shopping and told a surveyor he feels worse about it than at nearly any point on record. And the central bank is caught precisely in the middle. July consumer prices rose 1/10 on the month, 3 4/10 on the year. Producer prices flat, cooling, not collapsing. The July meeting produced 3 descents pushing to hike, the first triple hawkish descent in a decade. Futures now put September near a 44% chance of a hike, with the hold favored. Read that again. The live argument inside that building is still tighten or wait, not cut. So, a committee arguing about tightening now has a consumer rolling over beneath it. There is no version of that box where the exit is virtuous. Every institution in history that has stood in it has eventually chosen the debtor over the saver, because the debtor votes and the saver merely complains. The merchants debase, the warriors stack. You get the test this week. The minutes land Wednesday. Home Depot reports Tuesday, then Target, Lowe's, and Walmart. 4 direct reads on the same consumer who just quit. And Nvidia reports on the 26th against $91 billion of guided revenue. One last mark, and it runs the other way to everything above. On Friday, Bank Leumi, Israel's largest bank, said it will embed direct Bitcoin, Ethereum, and Solana trading and custody into its retail application and its institutional platform, built on Galaxy Digital's execution and custody infrastructure. Deployment does not begin until early 2027. Hold the 2 clocks side by side. On the fast clock, the funds bled $390 million last week, and just under half the coins on Earth sit underwater. On the slow clock, a national bank spent that same week wiring this asset into the accounts of an entire country's retail depositors for delivery 18 months out. Nobody builds bank infrastructure on an 18-month horizon because of last week's chart. That is a capital decision, with committees and vendors and regulators attached to it. It tells you something the flows cannot. The institutions are still laying pipe while the price falls through it. So carry this out of the weekend, Warband. Friday handed you 3 things. A filing showing the chip vendor now owns pieces of its own customers, a consumer survey at 51, and a bank in Tel Aviv quietly plumbing Bitcoin into a nation's phones for delivery in 2027. Same story, told at 3 different speeds. And here is the one that should keep you steady. Just under half of all Bitcoin sits at a loss right now, and it is still sitting there. That is not a warning. That is a census. Anyone who wanted to sell into red has had 7 months to do it. The coins that have not moved are held by people who do not. This is Warband as a service, Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Stand armored. Stack relentless. Let the weak hands feed the fire. Skål.